Well, just remind ourselves of what we are trading. The market bounced yesterday on dollar strengths. Uh, this is, of course, a delayed 4 hours. We bounced out of 140.80. We're today at 143.50. We're at that level here, at the neckline. All right, so tomorrow we're going to get at least simulation of hawkishness by the Bank of Japan. We get a retraction probably to shoulder levels by continue on the uptrend towards the 200-point moving average. We're looking at 145.70, actually 145.77 appears to be resistance to this week. Remember, we did discuss that we're doing recurring lower shoulder levels because they're being capped by a wedge. Okay, so it takes us to 45 minutes, takes us to today's 45 minutes. We're looking at this for some time. The relevance here, the important thing we really need to focus on are just 2 points. We keep doing lower shoulders. We keep doing lower shoulders. We're at 143.50, so we do not expect to take a trigger until 145 because 145.44 is a level 1. And of course, we're inside of a wedge. This is the wedge showing here this thick yellow lines, upper boundary and lower boundary. And of course, being inside of a wedge, we are going to maybe transcend level 1 a bit. So instead of just rejecting 145.50 or 145.44, we may even go as high as 145.70. All right, so we will update now on the next chart. We've done an A, we're doing a B. We get to do later on a C. We're not bothered with anything except the B because this is what we're trading. And the B is a 1 and a 2 and a 3. And that's what we need to focus on. That is the B. We want to do that top out. Okay, so we had the A, we had the B, and the B has already done a 1 and a 2, a 3, and the 4A, 4B, and 4C is doing a 5. We believe this is the correct segregation. We'll cross-check it when we go live. But why are we finishing up with 5? Because we are at a neckline, and because tomorrow is a fundamentally driven day, and that B, all right, is an A, B, and a C. So it ends with an A here and 5. It's going to be doing maybe some strengths in the yen. We get a retraction inside of the structure, 1, 2, 3, 4, 5. We're still going to check it. But we bounce out of level 3, we bounce out of the 200 point the shoulder levels, and we continue higher into 3 or C of B. It will take all day long tomorrow. We do not expect to begin to take short triggers except next week. You have a flasher here in red, Bank of Japan intervention, because it is possible to have a low shoulder at around these levels and crash to 139, crash to the neckline. Only possible if we have policy guidance, if we have tightening policy guidance by the Bank of Japan. So if you find that there is a release tomorrow that the bank will say widen the band of the 10-year treasury bonds, it means that now they're paying 1% interest. They can widen it to 1.5%, for instance. It does not mean that they're going to increase short-term interest rates. They're just widening the yield on their 10-year treasury bonds. This is, of course, a tightening measure because you're paying interest, and therefore you have a stronger yen, and therefore the yen will impact the dollar to the downside, especially if the Federal Reserve is going to be decreasing rates. Is this going to happen? Unlikely, very unlikely, extremely unlikely, as a matter of fact. Why? Because the Bank of Japan is very conservative and already the dollar is depreciating. So let it depreciate. They would want to wait and see how deep it goes down on its own. If the dollar is depreciating, if Mr. Powell expects to do another 2 interest rate cuts until the end of the year, then why cost the Japanese government money? I mean, why pay more interest for your debt? Just let the Federal Reserve do its job, and maybe actually on its own, as people begin to deleverage out of risky assets, the yen will appreciate against the dollar sufficiently to go down maybe to 140, and you can bring the cap down and you don't really have to increase. And if it rises again, you sell it, for instance, or you sell dollar, you don't really have to actually increase the yield band for Japanese bonds. And therefore, this move is very unlikely. Rejection at that flasher is very unlikely. What we expect is continuation all the way up. Do we have to do a shoulder before we continue all the way up? Don't even have to do the shoulder before you continue all the way up. You can just continue all the way up. When you fall back, that's when you begin to see the shoulder, and then the market bounces, say, at 141, does something like a head and shoulders, and continues lower. So shoulders work both ways, inverted and, let's say, upright. And therefore, the move is really probably 145. Needless to say, of course, if we are trading sterling yen, we don't need to trade dollar yen. It's one or two. Otherwise, we are just increasing risk. All right, let's take a look at the labels. That's what we get to see when we go to the 15 minutes, exactly what we get to see. We believe we're moving inside of an ending diagonal because, of course, we are doing a shoulder level. We have a 1 and a 2 at that point because we have an indentation of level 2. We have a 3, we have an A, B, and a C, but we believe this is a leg A and then A, B, C, leg B. We're doing a leg C. That leg C is going to be 5 swings. That leg C is going to take us tomorrow to 145.22. So that leg C already is done on 1 and a 2 at this indentation. Amazingly, has done a 3 and a 4. It's about doing 5 so far. All right, so far, of course, the market rose to 143.80. All right, it is possible that we will check, of course, the momentum picture when we go live, but I doubt that we have such a... tomorrow is a fundamental trigger, and we can get a very strong 5. We'll have to check it on the 5 minutes, but it's possible. If we go all the way to 145.22, we'll have to do the long after the release tomorrow. Anyway, it becomes quite clear where to do the entries and have the hedge probably below a level 3. Right over here, this is a level 3. You want to be below that level 3, quite close to level 1. It is also possible that this is a leg B. We have a leg A where you have 5 swings, and if you have more central bank, let's say central bank firmness regarding hawkish yen, we get a shoulder. We broaden the lower boundary of that ending diagonal. The market then bounces. It's like an A and a B and a C into this B. Market bounces again to 145.20 and maybe 145.70. Our bias is to long. That is all. Seriously. Our bias is on the long side, and therefore we wait for the release. If the release is showing yen strength, stand down, wait for a shoulder level, buy the shoulder level. Same situation like what we've been looking at on the sterling yen. Take a trigger on the 3 and 5 minutes when they are in positive momentum. Top of a level 3 here. Take it to the end of the day. Of course, tomorrow, end of the week, we only buy a half size. If you find that the bank issued a statement that is very dovish, we will be able to see good positive momentum on the 15 minutes, on the 5 minutes. Don't just jump in the market. Wait until you get to see any negative momentum on the 2 and 3 minutes. Your ending diagonal, any negative momentum on 2 and 3 minutes means a bounce towards the lower boundary of an ending diagonal. Take the trade. Stop is below internal level 3 out of the breakout. And we take it to the end of the day. We should be seeing 145, 145.50. Let's take it live. I believe we still have a final chart. Right, it means I'm going to update the charts. I'm going to update the labels, sorry, and I can now update the neckline. It's going to be a support, not really resistance. If you see this strong momentum driving towards it, it's going to be a support. And at this point, because we have a bit of negative momentum, very small but very meaningful, we get a 1 and a 2 at this point. I'm also going to highlight them so that we know that we have a level that should not be reached, should no longer be transcended. and we are moving higher into 3. We're also going to get a 5, not only a 3. Very sorry, excuse me. All right, let's take a look now at the internals here. So this is indention 2 and indention 4. I would want to close to round up immediately and not waste time with the smaller internals. So I can do this. I would want to broaden the lower boundary of ending diagonal. Actually tighten it. I believe this is more like what we're seeing. Probably we don't really need momentum at this point. All right, so we have finished the 1 and the 2. We are quite sure. We have done, I believe, so we're going to be doing a 3. Can take us to 146.15, but probably just takes us to resistance to 145.20, 145.50. That 3 will have a 1 and a 2. I believe has already done a 1 and a 2. Who has done a 1 is going to be doing 2, is going to be doing 3, is going to be doing 4, is going to be doing 5. It's a 3. It could be the end of the move because this is a B and then we're going to get the C to the top side. It could, if we're really seeing a very strong dollar against a very weak yen, we could get a 4 and we could still get a 5 and we get shoulder levels equating with what we're seeing here on top of the green. We're not bothered with the shoulder levels on top of the neckline because it's going to be next week. And next week we will be in doubt whether are we really seeing shoulder levels on top of this green neckline that break to the downside, or are we seeing an inverted head and shoulders that break to the upside? It's going to be a different story on different momentum structures. What is important? Just we get to 145.70, 145.50, and we take the trade correctly, and we'll hopefully make money. And then at these levels, it's a different story. All right. So I believe we still want to wait for the release. But if we wait for the release, then we get to see retraction into this level 2. It will show as mild negative momentum on the 5 minutes and on the 15 minutes. We buy it on belief that by then, of course, the statement will have been released and we will know that we don't really have a strong yen and that there is nothing new in terms of yen addition in terms of strengths. And therefore, we buy negative momentum on. Very sorry. Very sorry, excuse me. And therefore, we buy negative momentum on the 5 minutes, even on the, maybe even on the 15, around top of that level 1, and the hedge for that matter is just below level 2 or just below level 1. Of course, the hedge will come in once we have a confirmation. Confirmation in this case is a cycle extreme. We need to see negative cycle extreme on the micro frames, something like the 2 minutes and 3 minutes and maybe the 5 minutes. Best entry is going to be 142.35. Market is 143.80 at this point, and the hedge, if you are in at 142.35, is around 141, below the shoulder levels. Target, of course, is end of day. Most probably it is resistance to, on this 30-minute time frame, 145. Maybe, possibly also, midway between resistance 2 and resistance 3, 146 is possible, 145.80. Let's take this to 5 minutes. We'll just look at the 5 minutes to show the triggers. What kind of momentum trigger we want to take. A cycle extreme like this, of course, is perfect, the best. Even if we miss it, buying market at that point means market never again attacks the cycle extreme until it does a new leg 3. So otherwise, we'll buy a negative moment. It will be too quick tomorrow, but we will see a cycle extreme in the 2 and 3 minutes, right? And we will only act after the cycle extreme. So let's, for instance, investigate this. Do we have a cycle extreme on the 3? We don't. Do we have a cycle extreme on the 2? We don't. But we have negative momentum. All right, and then we would go on momentum reversal. If we lack a cycle extreme, we'll go on momentum reversal on the 5 and 3 minutes. So we had negative momentum on the 5. We have positive momentum on the 5. We have positive momentum on the 3. We just buy market. And at that point, assuming this is tomorrow, we buy market at that point. Of course, we know the labels here, assuming we have different labels. We buy market, and the hedge is 2 internal supports, just like here, from entry. So I had negative momentum on the 5. I also had negative momentum on the 3. Let's take a look at where we have positive momentum on the 3. You don't see good positive momentum, not just any positive momentum, something about the revolt. And on the 5, you get the same. Not very strong, but you still get the same. It's only up here that we get positive. And then we do the buy. You just want to be 2 internal supports from entry, your hedge, and we take it to target towards the end of the day, 145.